Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, November the 11th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview, wave 1 is done. We're working on wave 2 down. At some point, Ian, James, Mr. Tucson, Harold, this is going to end and we're going to go breaking out. But is this over, or are we going to keep going lower first? I'm still not convinced this is over here. We're ready to go breaking out. We did reach a resistance zone and starting to pull back like we discussed last week. In fact, we talked about setting the software up and taking the PAI hook when it turned and triggered. We did this and we're up about 62 points, 60 plus points. And is this just going to go down, make a higher low, higher high, or is the daily going to cycle? Well, this is when you go and you get to a position of authority, right, Ian? We talked about this, that once the daily turned over, it has the option to obviously cycle down. Like we started over here, we went down, it slingshotted back up. So is this going to do the same and we just kind of pull back and then go pushing out higher? Or does this daily cycle all the way down? So when we talk about these procedures and we say when we get a daily PAI hook, that's the PAI hook, trend momentum cross. The only AI you need to know about is price AI, and that's right here. And moving lower, this cross, so we call it a hook and cross, PAI hook, trend momentum cross. We have slope, we have angle separation. And what happens when a daily gives you a PAI hook and cross? The 4-hour cycles. And toward the end of the week, we said when the 4-hour turns up, more than likely it was going to slingshot lower. So we talked about being in a position of authority. And what can you do with the software? It's automated. You can just click this BE+1 button. Now, this is a no-risk trade. We cannot lose anything here. And if we continue to push lower, then we could reach our target 1, 2, and 3 further down. Or we can then get reversed and get pipped out for profit. But that's what it means to be in a position of authority. And the 4 hours likely to continue to push as the daily does. On a weekly scale, we're just kind of still up. So this is the main reason why I want to be in a position of authority. Yes, this could slingshot lower. We make a new low like it did last time here. Wasn't much of a new low, but it still slingshotted lower. And we obviously went to a new lower low. So could this thing turn and slingshot lower and take next several weeks that this thing pushes lower? Certainly. That's why we have outstanding take profits down here, 1, 2, etc., on the way down, that if we do get this thing to push to new lows, then we have more targets to the downside. Otherwise, we could be in a position of authority, and this will be a winning trade no matter what. Fair enough? So this is why that high level overview, I'm not convinced this is over, and this is just going to be a little pullback and we go breaking out, and this is over. Because if we do go breaking lower, we should make new lows, and that would put our extension further down. on not only the targets, but looking at the charting platform where I do all my charting because it's so easy to do, is that where's the area of support? If we don't hold this magic Fibo and go bouncing higher, then we're looking for this little box in this area. And if this doesn't hold, then we're likely going to come down and make some new lows down around 97, 94 area, 97.70, 97.40 area. And what if we do that? Well, the rule is from the low to the high, you don't, and you do break below this 618 level, then the probability we're going to make new swing point lows becomes very high. And what would those levels look like? 95.60, 95.12. So in the interim, the reason I'm in a position of authority here, because what if this thing continues and we start pushing lower? It sets the tone we're going to come here. And once we come here, then it sets the tone. We have a 95% chance, 75% chance, excuse me, that we're going to come down to this target, right around that 95, and then a 70++%, we're going to come around 95.12. Well, what if we do that? That's a new swing point low. And guess where those take profits are located? You guessed it, right at those targets. So I'm in a position of authority, can't lose. Even if this thing reverses and goes blasting off, I'll get pipped out for some profit. I like it. It's a winning trade no matter what. If this continues to push lower, then we have these areas we need to see cross. Bottom line, if we get to this green box, the bigger green box, and we have a candle body close below that, then we have a very high probability we come in and make a new swing point low. In the interim, that's why I'm in that position of authority. And if we get down here, then we'll probably go on and reach our bigger take profits, which is on that chart I showed you a moment ago. Amen? All righty. So in closing, is this the end of that correction? And we're going to continue down? Well, the dollar index has been in a downtrend. And last week we talked about this, that we're expecting this to come up in this resistance zone and get rejected. This is the big area we expected it to get rejected from. And now it's rejecting. That's why I'm in that position of authority. Why? Because the daily was setting up with a reversal. And remember, we set this trade management system in advance. We put it in ready to trade mode to take the trade short, and now we're up 60+ points. I could touch this button right here, and that would automatically take profit one. But if this plays out like we're anticipating, then we're probably more than likely going to get a daily cycle down. And by doing so, that's coming into this zone. We reach this, and we get a daily candle body below that. So we're only talking we need to drop like another point-ish. We start taking that swing point low out, which is even before this green box a touch. We start taking this swing point, say 95.5 area. We start taking that out. Then the probability that we're going to go lower sets the tone, and the lower would be what? New swing point lows. So even though you do it incrementally and say, well, if we don't hold the magic Fibo, we're likely going to come test the support zone. If we don't hold that, we start closing in this area, then it sets the tone we're coming down here. By getting here, it sets the tone, especially daily candle body close in this green box. Then we're looking at what? New swing point lows. And that's where those targets are on this, the new swing point lows. You can see down at 94, 92. So I'm looking for potentially much bigger moves lower. But in the interim, that's why we're looking for these targets to come into play. 95, 94, etc. Right? All righty then. So be in a position of authority because this thing could bounce and we go higher, remember, to the upside. What if this is just simply a depressurization and we get another push? Well, if we go breaking above this swing point high, then I suspect we get to 102. The short squeeze kicks in, and more than the highest probability, we're going to go popping toward 105 to 107. So on the long of it, if this holds and we break above the prior swing point high, then we're likely going to go test 102. If we hit 102 and that short squeeze comes in, what is the short squeeze? Everything but the dollar trade, everybody's short on the dollar. So that would put the squeeze on everybody shorting the dollar and would cause a short squeeze for this thing to go popping up. So if we start closing above 102 with a candle body, then the probability we make about a 3-point-ish run toward 105, 107 zone becomes very high probability. That's to the upside. But for now, I'm looking for more downside. And the more downside we get, the further down we're likely to go. And the way we get a new swing point low is basically to start breaking 98. You can see we have our 618 on this prior move at that 97.80. So I say we start closing below 98, which is right around that swing point low right there. That gives us a 75% chance we're going to make a new swing point low. And that would be my 95.60, 95.12 area. Any questions? That's the plan. And if not, and this baby reverses, then we just get pipped out of that trade for a little bit of profit. And then what happened? We break this high, we're likely going to push toward 102. If we reach 102, the short squeeze kicks in, and then I expect that to push price toward the 105, 107 target. What about the euro and the pound? We talked about buying this dip, that we expected this thing was going to grind higher as the dollar turned over, the euro dollar would go up, inverse relationship. Now we're looking for this to continue to grind higher as the dollar grinds lower, but we can see we do have a big resistance zone in this area from the prior high to the low. We got that 618 up here. So if we can start breaking this swing point high, that sets the tone. This is going to go up toward 119, 120 area. So we got to get past, and I'll raise this just a touch for the 618, 786 zone. Let's include that in there. And the reason I'm stretching it a little bit toward the 0.5 is because prior price action. So this box is a little bit larger, but as we start getting into this, we start crossing above that 117.60 area, start closing above that. Then we have a 75% chance we go into 119, basically 120, 119.90, 120.50 would be the plan. Fair enough? So what did we do? We talked about this last week, setting the tone for us to buy the dip. We set the software in ready to trade mode, and it bought based on the PAI hook trigger. Remember I said all I want for Christmas is my trigger, trigger long, and we're up over 100 points. The same thing here. This trade is at risk because if it reverses and goes down, so you have an option, you can push the BE+1 button, and it automatically makes this into a winning trade. So worst case scenario, this thing slingshots back down. What is a slingshot? When the red and or red and blue races off from green money flow and snaps back, and we went up, and then we made a new swing point low based on that slingshot. So what if it does that again? Worst case scenario, this thing will push lower and pip us out for some profit. So this is what we call a winning trade no matter what. What is the plan? For this thing to go up higher towards the targets, that 119.90, and I have these pushed even further out because that's where the extensions would lie further out. But this is why I'm in a position of authority on this trade as well. And it was all based on the software, buying it in advance when this baby reversed. Remember, we did this days and days in advance, and it just stayed until it finally hooked, automatically fired, and then entered the trade. Well, we did the exact same thing with the pound. We're up over 117 pips on this one. We said the exact same thing. Let's set the software to buy, set ready to trade mode, let it trigger higher. For days, it took a little grinding lower till it finally triggered. The PAI hook got the trigger long. It entered the trade. And again, we're up. So this is again at a position where we could go and lose. Well, you can push take profit 1 and take 1 off the table. Some people would say, I'd rather at 100 pips, I want my profit. So you push the button. And you get this little video says that congratulations, you've take profit 1. You're now in a position of authority. And we just locked in 118 pips. And now we're not only at break even plus 1 automatically, but we banked a lot of pips. So I still think there's more upside to be had on this. And if not, and this baby reverses and gets pipped out for more profit, we already banked profits. And all this was by setting in advance the software, expecting the bounce, as we discussed last week, looking for this to go lower. As the dollar index would bounce a little bit more, then it would reverse and the euro and the pound would go up. And you can see here from our discussion, I expect the ES and NASDAQ to start dipping from Thursday, dip down and look for the euro and the pound to go long. How about that? So we discussed it all in last week and the software executed it, no problem. And now you can see you got on-screen programming where I can move my take profits once they're somewhere. And you say, no, I don't think it's going to go that high. I can go and move them down. I can move the stop loss now that it's at break even plus 1. The software is so smart. If I move that out of break even plus 1, where we get some more ticks, it'll automatically move it back in the break even plus 1 because it knows it's already there and you already took your profit. It won't let you take a winning trade once it's at a break-even point to then turn it into a potential losing trade. Very smart. All righty then. Well, let's continue. So the bias is the euro and the pound should grind higher in the coming days as the dollar should grind lower in the coming days. But it doesn't matter because we're in a position of authority on all those trades. All those trades are winners, and there's no way for them to lose now. Even if this reverses and get pipped out, again, you can go over here and go to the software, and I chose just to do BE plus 1 on this, but I can still press this take profit 1 and lock in 65 points. I'll show you what that looks like. Just press it. Your number 1 goal of trading, relax. Break even plus 1. Enjoy your no-risk trade as there is only additional reward remaining. So it comes with the added bonus of a little encouragement audio to tell you congratulations. So this is what we mean by on-screen programming. And sure enough, this is not only a winning trade, we now banked profits. And we still have our take profit 2 and 3 outstanding, which are several points lower, looking for a new swing point low. And worst case scenario, like we said, we go in reverse, bounce, and go breaking out. It'll stop you out in for more profit automatically based on that. And what if I get down much further and it comes way down here and I'm up, say, 150 points, and then it bounces, then I can move this stop loss. Even from now, I can move it deeper into profit, right? A minute ago, when it ticks, now we only got 29 points till we get to the stop loss for a bounce. And you can move it that way, but you can't move it out of that because it won't let you do that. It'll automatically push it back to where it goes and it'll tick and show you at break even plus 1. So you can move it deeper into profit, fine, but you just can't move it out of profit once it's been taken. That's a cool safeguard on this software. All righty, so let's finish up. This is likely to continue lower. Again, some key levels to watch. We start taking the swing point low around that 95.50 area slash 98 area. That's the big one. If this thing comes down, we start taking this swing point low out down here. We close below 98, then the likelihood we're going to go and make a new swing point low becomes very high. And what are those targets? Your Fibo extensions, 95.60, 95.12 would be the areas that I'm looking for. Up and until then, I'm in a position of authority on that short, and I'm expecting this thing to keep grinding lower and lower. And if not, it reverses, then it pips you out with profit, and you're good to go. And again, we break this high, then we're likely going to make a push toward 102. If we reach the 102 target and we hit the short squeeze, then we're expecting a pop to push us toward the next extensions up here, 105, 107. And that is the big resistance level off this prior move, high to low. That's my 618, 786 to the upside. So this is why this could turn. We hit the shorts and it goes popping up here, but that still doesn't mean we're going breaking out. It means we could reach this level and still reverse and still make a new low. So what is this we're going to? The bigger picture. It's way too early to call this over. I don't think it's over. I think it is going to go lower. But in order for us to call this done and we're ready to go breaking out to new highs above that 114.72, and we would say this wave 2 right here is over and we're going to go up there, then we need to see more price action. What is that price action? That price action is this right here. We have to get above this 106, 107 to set the tone that that wave 2 is done to go breaking new highs. So as we would get up to this extension up here, that's not at a new high, but the probability we're going to make a new high becomes very high. So this is the critical level that the dollar really needs to stay below. And if you've been with us for a long time, I said it over here a very long time ago, as long as price remains below 109, we still remain bearish. So that push up there still remains, just like when we popped up here for this correction. I was very adamant. This does not look like a breakout to new highs. This is not enough action on that move. We need another push lower. We've got it. The question is, 3 years ago when we gave this target down here, are we going to reach it? It's not out of the question yet. We still got to finish this and then confirm it's over. So that's what we do. We give you a primary direction where it's headed and a alternative direction. If it does this, then we're likely going to go up here, meaning it breaks this area up here. We're likely going to go up here and break new highs. And if we don't, and we continue to push lower, what are my targets lower? We incrementally keep pushing. And the more we push toward those lows, the more we start getting toward my target. And what is that? That's down here. So from the prior low to high, we took out that 618 level. That's why I'm still thinking we got more downside based on the rule. Yeah, close below the 618 level candle body. Well, we have weekly candles that close below that. And we most recently bounced just a little bit above it, but we had closed below this, opening the door to go down toward 85, 82, and that's awfully close to our original target we gave over 3 years ago for this thing to pull down towards 80. Got it? So this is why I'm still thinking these bottoms aren't done where we're ready to go breaking out yet, but I would be remiss if we didn't discuss that to say at some point this wave 2 is going to end and we will go breaking the new highs. Is this the end here? Last time when it was this low, I said it was very unlikely to be the low. We looked for a new swing point low. We got it, not by a lot, but still made a new low. So obviously it couldn't have been over here. Now, is this over? Maybe, maybe not. But until signs change and we break above that 107 area up here, pushing toward that 109, then we could say this is over. But I'm still thinking lower high, lower low. And yes, at some point, either between where we are and our long-term target of over 3 years ago we gave out, we're going to reverse somewhere in between here and eventually go breaking out. Fair enough? I'm just not convinced this is it. I think there is more downside. So what do we do on that note? We drill down further on the timing and we go more specific to the current price action. And that's why if we go breaking lower and we start reaching that, say, break below 98, 98.50 area, then the probability we make a new swing point low is extremely high. And look at that potential trade. We close below 98, which is this 97.80 on this chart right here. So below 98, if you want to be specific, below 97.80, then the probability we go down toward 95 is extremely high probability, 75+%. And I like those odds. And knowing I'm in a position of authority, already bank profits here, it still has to go a ways before it really sets the tone going several points lower. But you can see that will turn into a massive trade. All right. And to the inverse, again, Euro's in a position of authority. If we start breaking above this resistance zone, then we have targets at 119, 120.50, pound dollar. Same type of thing. We still got a long way to go. But if we can start breaking above this 133, 133.70, 133 area, this green box, basically what are we looking for? If this can start closing above the Magic Fibo right here, then it sets the tone. We're going to 135.40, 135.90. And by making that move, this much higher move to the high to the low, we start closing above that 134, 135 area right there, 135. Then that sets the tone. The pound's going where? 139, 140. And that's 900 more pips, 8 to 900 more pips from where we're already in it, over 100 pips. So that's what we had talked about a few weeks ago. Is that the bigger A, B, C correction? And we're ready to go blasting off? Well, we're in a position of authority on that trade. No matter what it does, it could go plummeting lower. It's going to stop us out for more profit. We've already banked profit, and we're looking for a lot more to come. Amen? So in the short term, we start closing above the Magic Fibo. I'd be targeting 35.40, 35.90 area. And we start closing above that and reaching this zone. Then it sets the tone because from this high to low, there's my magical level. And we start reaching these targets. That says we have a 75% chance once we get to the 35.40, 35.90 area, we're going to continue to grind in a stair-stepping affair up towards 139, 140. How cool is that? What about the pound yen? Pound yen bounce. We talked about this being in a position of authority. It did bounce. Are we going to go breaking out or are we going to sell back off? Again, worst case scenario, we took some profits. We're in a position of authority. If it pips us out, we'll look for another opportunity to short this thing. I still think this pound yen is going to go down lots and lots of pips to the downside. And the technical reason is from back in 24 when we had the carry trade unwind. We got this impulsive move down, and since then we've been overlapping and chopping, and we're still at that lower high. The bias is we're going to go lower low in the long term. So that's why I'm getting to the short position, looking to stay in a position of authority and let it continue to run. Again, if you get pipped out, next opportunity, you just sell it short again. And the bias is we are going to go lower, higher probability, then we're going to go breaking out. All right. And if we look at the software, I believe I have it in here somewhere. Yeah, we did get pipped out on that one. So this is the one I had it running. We took profit one. We got pipped out, as you can see. So I'm looking to go short again. So I'm looking to do this same type of move. When what happens? I'm waiting for the daily to reverse. So I'm going to do the exact same thing I did with the dollar index and the inverse of what we did with the euro and the pound. You go into your expert advisor properties and you set your take profits, and then you come down in here. What are we looking to do? I want a trigger short right there. Trigger long? No. I want it false. I want a trigger short? Yes. I don't want a slingshot long. I don't want a slingshot short. So I'm just setting this up for this to position and get back in after we made those hundreds of pips, got pipped out for more profit. I'm looking to sell that once again. And this is how you can do it with the software. You go up in here, you set it to a trigger long, false, trigger short, true. And when the daily gets overbought and triggers back down, this baby will be ready to go. And it's in ready to trade mode. So we're looking for basically a lower high, lower low. And as this turns back over in the direction of the weekly, that's overbought, in the directions of the monthly, that's overbought. So what I showed you months ago was this slingshot. I'm expecting to turn and hook down, red hook down, blue hook down, green hook down. And as this pushes lower in the coming months, when we get a slingshot up that fails and disengages, as we call it, and this starts pushing lower, what does that mean? Like I said, when this red line hooks down, the blue line hooks down, and green money flow hooks down, then the probability price is going to go back toward the low and make a new low, becomes very high, and this pushes lower. That's the plan in the coming months. So no wonder you get in a trade, you make some profit, you get pipped out, you get back in, you get some profit, you get pipped out. It may take you a few chances before you finally get it going, but this thing should produce well over 1,000 plus pips to come back to this low and make a new low. That is the plan. So back to the daily. As the daily kind of chopped and reversed to pip us out on that latest move, that's fine. I like making the profits and banking them and being in a position of authority. So what's next? Go back to ready to trade mode, looking for the daily to push. Perhaps this will grind a little bit more, then it'll push lower again, and we'll go back short. All right, so big picture, you'll remember back from COVID low, way back in the COVID low over here, I was the biggest bull on pound yen. I said we need to be buying the pound yen because it's expected to go up almost 8 to 10,000 pips was the plan. Let me show you that bigger picture. That is in this picture. When we were here at the COVID low, made a statement, said in the next few years, COVID low, next few years, this thing is going to grind and go back to this high and make a new high. It did exactly that. That's back in the archives. So this is an armchair quarterbacking after the fact. Well, you could have done this. We talked about it way back here in the archives, saying this is a great opportunity to make upwards of 8 to 10,000 pips on that move higher. We got that. Biggest bull out there. But when 2024 rolled around and that COVID trade more or less ended, and we got the, let me go back to the weekly, and we got this, well, I'll do a 3-day, and we got this pullback right there, and we hit this. We hit this price action where we reached that target and we did this big reversal. This was very impulsive looking. And if this is a continuation for this thing just to keep going, then you need a 3-wave correction. That is not a 3-wave correction. That is extremely impulsive. And since that low, what have we got? Overlapping, chopping, grinding, laboring type of move. And it's went back toward the 618786 zone. And we watch this and we're still at a lower high. That's why, based on this move down, we more than likely need a new swing point low to clean up all this mess, right? So this is the big picture. So this is why I'm looking to establish short positions for this thing to run 1,000 plus pips. If we go down and make a new low below 180, that's 2,200 pips. I like it. And just because I just recently got pipped out for profit on that trade, and I'm looking to reestablish another short to keep it going. But once this baby starts breaking down, I showed you on that monthly chart, once the PAI starts disengaging, this right here, once it starts to disengage on that monthly, this thing is highly probable, again, when the red hooks, blue hooks, and green hook, what are we talking about? Months into 2026, might go into 27. Just like I told you here, this would take multiple years to make that run to make a new high. We got it. We got that violent reaction from the carry trade unwinding in 2024. And knowing price action, this needs to be a 3-wave correction. That's not 3-wave. And look at this bounce. That looks 3-wave. So this is part of the A. So let me go back to, you can do it on this chart or we can do it on any chart, but let me clean that up. So what are we saying? This move down is the A wave. This bounce looks 3-wave. That's the B. And we're due to come down, make a new swing point low for the C wave. And that's where this red hooks down, blue hooks down, green hooks down sets the tone. And from the engaged slingshot, that right there says when it disengages, we're likely going to go back to the low and make a new low. That's why I'm consistently looking for opportunities to short this and get to a position of authority. And if it bounces to pip you out, then you go back to the daily, which is the one that's reversing at the moment. So that's why I'm going back to ready to trade mode. And this baby can sit here for days. This week, next week, the week after, up and until this gets overbought and we get a hook back down, get that trigger short, then we're good to go. Fair enough? That's what we did up here, made some pips, got pipped out, did it again, got pipped out. So you keep adding up these pips, and I'm just holding my breath for what? This thing to go running and make some new swing point lows, 1,000 plus pips below when it makes that run, over 2,000 pips from where we currently are. That is the plan. Amen? Any questions? So, on that higher time frame, we're looking for this swing point low to come in. That's the monthly slingshot back up. And now we're looking for it to disengage and push lower, come back to this swing point low. Fair enough? So it's in ready to trade mode, rinse and repeat, get right back in it to win it and get more profit. So this is the bigger picture. This is where we're headed, in my humble opinion. So anytime I get to that position of authority, if I do get pipped out, take the money and run and look for my next opportunity to short it again. We did it twice on this. Down move here, got pipped out once. Down move here, got pipped out again, but these are hundreds of pips banked. Now we're looking to do the same on the next big run, which should turn into well over 2,000 pips as we make a new swing point low. So in closing on the pound yen, The bias is this is going to go breaking down. Pay me now, pay me later. Still believe in the big picture. This is the A down here, that move down. All of this corrective, which looks more three-wave-ish, is the B wave. And we're going to stair step our way down, probably well into 2026 or even beyond, to get that C wave. Well, it could do it very quickly, so I won't say it has to take, a year plus to get down here. It could happen much faster, but that's the plan. Amen? All righty. Let's continue. Dollar yen is still just kind of chopping and grinding, just like the dollar index. We're at a lower high, still looking for an opportunity to go down more than go breaking out in the longer term. But just like the pound yen, I was the bigger bull. And we talked about this way back in the day, go back a few years ago, when we had this big run up. We got this correction, and I made a bold, not a prediction. Everybody does a prediction. I leave predictions to the prophets, but I made a bold statement. I anticipate with the best of them that we would make a run and go up toward 160. As long as we hold 127, we're going to 160. I was very bullish on this because by being long the dollar yen, you got paid interest payments, having a higher interest rate dollar versus negative interest rate at the time, the yen. And we said that this should make a run from this point up to 160. And what did it do? Missed it by a bit. It went up to 160, 160 instead of 160. How about that? But we made thousands of pips higher and interest payments every day. Since then, look at the price action. That is corrective. We got a bullish move down. This was a little bit different. This did come back to a double bottom. Is that the three-wave correction? We're ready to go breaking out. I don't see this breaking out until the dollar goes breaking out, dollar index. And if the dollar index is breaking out now, then sure. If that wave two is done and we're going to go breaking out, then sure, this will go breaking out. But otherwise, this is likely going to get another push lower, like the dollar is projected to do, push lower. This should push lower as well. And this looks very chopping, overlapping. So again, we probably need another push lower to make a new swing point low before we look at potentially reversing. So the plan is to establish a short position as the dollar breaks down, then I'll short the dollar yen, looking for this to break down as well. But I'm waiting for the dollar to lead the path. And what was that? Just circle the wagons. But when you say, why do you spend so much time on the dollar index? Because where the dollar index is headed, a lot of asset classes are headed with the highest of highest probability. So if we go and continue to break down, we start getting below this swing point around that 98 we've been discussing, then I can short that dollar yen because it's going to go down when this makes that few point move down about 3 points from that 98 area down to 95. That will be a nice move down on that dollar yen as well. All right, let's continue. What about the markets? The markets are basically doing exactly what we were looking for. Let's go back a few weeks ago. We talked about after this pullback, we were likely going to grind toward this target zone, then get a pullback toward this target zone, then start grinding up toward this zone. And this looks like exactly what's playing out weeks and weeks and weeks in advance. We drew these targets out there, and sure enough, that's exactly where we went to. Now we're starting to bounce. So far, so good. Daily view, we're reaching a little resistance zone. This looks like a nice little 5-wave up. We need another correction. So I would not be surprised to see this start dipping toward that 618, 786 zone. So what are we going to do here? We'll go to an hourly time frame. We'll come back off of that swing point low where we bounce from our target, right? Well, we said we were likely going to come to, and that's what I said last week, that we were going to look for this to go dipping on Thursday, look for ES and all to go dipping. That's what it did on Friday. And then we started reversing coming into this week. This looks impulsively up. So this is looking good. So what do we need, Mr. Tucson? Randy? We need a retracement from the low to the high, somewhere around that 618786 zone. So we don't bounce off the magic Fibo, then we're likely going to start pushing toward the zone about 6750. I got this big green line right there. It's a big battle zone. Former support, turn resistance, turn support. That's on that bigger picture. You can see the former support in this area. It was former resistance over here. So we call those battle zones. Resistance there, support here, resistance, support, support, back to resistance, back to support. So it's been flip-flopping. So this is an area based on this bounce. We need a correction to then do the blow off top where we're going to go much higher. Amen. So this looks impulsive up. 1, 2, 3, 4. Is this the 4? We get one last little push, then we get a correction, or is this already topping and we're getting the correction? But I'm looking for that to come down in this zone, somewhere in this area of a correction. Whoops. Put that back and lock it in place before I move. So ES traders, definitely take profits on that bounce we discussed. This isn't the end. I don't see this as breaking back down and plummeting just yet. I think we're going to come and find some support and go breaking out higher and continue with that last blow off top and go back to the daily. What are we looking for? Up here around that 69, 7,000 area is the plan. So we wanted to see the bigger dip. We got it. We're bouncing and we're looking for more upside. And that target, a longer term target. So let me zoom in on that. Move that out of the way. Now I can zoom in. Yeah, that's in my way. Get that out of the way. Here we go. And we start zooming in, blowing this up. So to the upside, my target is up here, 6980 to 7,000 area. Turn this way, stretch that out. Here's the target zone up there. Shrink that a little bit, move the whole thing, something like that. There we go. So what are we looking for? This to stair step. What is stair step? This. Up, retracement, stair step. Work its way toward that blow off top. Still think the markets are setting up for the Santa Claus rally. Seasonality didn't exactly play out like it was supposed to because we wanted to see a little bit of dip and a rip going into November. Well, into November, we're actually getting that pullback. So as far as the seasonality chart, but the Santa Claus rally is still viable as we go into the end of the year. And that's the plan from the recent high to low. That's where these targets come from. So you run your high to low, and let me adjust these and show you what that looks like. So I'll put some fresh things on the targets now that we have what we were looking for. We expected this from this bigger low, come up, retrace down to 618786 zone, reverse. So far, so good, right? So the targets are still there to the upside. Now the most recent move from the low to the high, we're looking for a retracement to come back probably toward this little battle zone. And it's got my box in the way too. But there's that battle zone. Kind of straighten that out. Wasn't exactly the straightest. But you can see that's a beautiful area for this to retrace down to. Low, high, higher low, higher high. And once we finally start breaking above that level, so I'm going to run this fresh one for you and show you what that looks like. This high to this low, see it's overlapping? We got it right there. Just to reiterate why the target zone is up here. Once we start clearing this 68 area, then it sets the tone. We're going to 69.80, 69.95, 7,000 area. That's where my box is. That's exactly where that comes from. So I wanted to just show you how I was doing it. That's from that high to this low. We haven't broken this yet to say we're definitely going up here, but that's part of that Santa Claus rally into the maybe first quarter next year. We should get that run. In the short term, look for this to pull back, to bounce, and then the grind up there. Got it? So far, this is where we talked about after this pullback, we drew this well in advance to go up to this target. We actually went a little higher. Then we said we would come down here. Then we would go up there. And look at that. We went a little higher. We went right to where we originally were supposed to go. And then we're going where? Up here. That's the plan. But in the short term, look for this big move up. We need a correction off of that. Typically, we like to see a 618 retracement off of that to then bounce and then continue toward this upper targets. What about the NASDAQ? NASDAQ is ditto. We pegged where we were going. We looked for the reversal, got a little feisty to the downside, and looking for this still to eventually go breaking out to all-time highs, receive that blow off top when I bring this in the focus. So when we were down here, we drew these targets up here days and days in advance, saying look for this to grind up to this target, then come down to this target, and then go bouncing up to here. Well, what's the NASDAQ need to do? Well, it's possible this does look potentially that this might even go lower, which we're expecting it to. So I'm going to remove some of these lines, but you can see why the target's up here, right around that 27. This was the target we drew a long time ago, and it overlaps with this next push. But I'm going to shrink this for you just to show you where I think this is headed before we're done. So we're up around that 27,000 is where we're looking for. The question is, and this is critical on this pullback, that we get the correction to hold this critical zone. So I'll remove some of this just so you can see what I'm looking at. And from the most recent, show you these zones, from this high to that low, there's my target zone, 1448. I'm thinking we're going to come at least that, push maybe upwards as high as that 1618. So we're going to adjust that a little bit up toward that 27.4, 27.5, up here at least to the 26.6, 26.8 zone is where I'm thinking. So that high to this low, when we finally take out this resistance zone, the 618786, we're going up to this target, 75%, 70 plus, onward and upwards to the zone. Got it? So in the short term, what are we looking for? We ran and did a beautiful 618 retracement. That's perfect. That was this down move, a 618 retracement. Now the critical point is going to be the inverse of that. Get that out of the way. And the inverse of that's going to be this. From this low up to that high, we need to hold this 25/24.9. So right around that 25.1, 25,000. So I'm going to readjust this just so it's already there. This needs to hold on this correction back down. Amen. So where do I think in the short term we're going to go? we're going to dip down and test the 618 zone. And if it holds, so this is part of the correction. So we went up, the correction, and we're going up here. But in order to get up there, we need to start to correct in stair step to get up there. Amen? So the plan is, I still think the Santa Claus rally is still valid, pushing to all-time highs yet again. But in the short term, I think we need a little bit of a pullback to then bounce to get up there. Got it? This is the critical level to watch on the short term of support. As long as we hold this 25,000 zone, then this correction is expected to come down here and bounce to then stair step its way toward our target. Any questions? Any questions on the NASDAQ? But boy, what an accurate display of where we said price was going to go. And it still hadn't finished yet. And even with this bounce and a correction there, well, that's the plan of action for us to short-term pull back, bounce, and as we move toward the end of the year, maybe in the first quarter next year, start blowing off top. That's the plan. Well, what if this, in fact, is simply a 5-wave correction, and now we're looking for a 3-wave to then push lower? Well, that would be targeting 24.5, 24.4, maybe 24,000. If we don't hold this support zone to go higher, then this correction is going to go deeper. And then what would I do? Even if this turns out alternate wise, where this is part of the 618 retracement that fails, and we start going toward these extensions down here, make a run toward this magic Fibo that's sloping upwards, then what would I do if I see it down here? Salivate to buy it, because I still think it's going to reach this target. So whether this holds here to continue higher, or we break down and then go higher, all roads still lead to new highs, all-time highs. Got it? So I said back here, after we reach this target, any dip should be bought and expect that this is going to bounce. Now the rubber meets the road. Is this part of that 1, 2, 3, 4, 5 to finish that type of move? And then we get the Elizabeth, I'm coming to join you, honey, as we go into next year. Or is this going to break down and not hold this support? Then we look for a new swing point low. And this is just a bigger, deeper correction to then still go up there. So I've been talking about Elizabeth, I'm coming to join you, honey, a long time ago. That at some point we're going to top and reverse and have a big correction. These aren't it. This is not the big corrections that we're looking for. It's coming. Whether it's the commercial real estate bubble that bursts, fiat currency that fails, don't know exactly what, but I know what I'm going to call it in honor of Sanford and Son, Fred G. Sanford. Elizabeth, I'm coming to join you, honey. Here comes the big one. So that's what I'm going to call the next financial crisis. Here comes the big one. And it's not correcting down here. We're talking massive correction. But in the short term, we pegged the pullback. We pegged this. We still got this to come. The question is, are we going to honor the support zone to get up here now, sooner? Or are we going to break below it to go lower? Probably more than likely seeking out this magic Fibo, and we could grind lower, bounce, and still get up here. Amen? So all I can say is, what if, William Bruce, this thing breaks down and doesn't hold the support zone and we start coming down here? I'm going to buy that dip and look for it still to go up to my 27-ish thousand target. Got it? And IWM, still kind of chopping and grinding. It too is likely going to push to its bigger target. up here at 256, 265. When we start to see several things over the last several months, we've been talking about, well, when is Elizabeth, I'm coming to join you, honey? Some people thought when it was the tariff talk and these other little pullbacks, was that the big one? No, that was not the big one. We got a lot bigger still to come. And the bigger picture, let's go out to a weekly and we can see what that looks like. This too is similar, where we topped out in 2021 and everybody else was making all-time highs, all-time highs, all-time highs. ES was making it, S&P 500, all-time highs. The Dow was making all-time highs. The NASDAQ was making all-time highs. And what happened here? We weren't. We started to top in reverse, got one last little fake blowout, and then we tanked. So based on this overlapping, chopping, kind of like the pound yen, we got an impulsive move down. We got a lot of corrective action. So in my humble opinion, the bigger picture is that's part of this A over here. All of that is part of the B. And I'm still looking for more upside before we're done. Then we come back down in C, which should bring us back below 160. So as we get this blow off top, and we'll talk about it, and we already give you signs and symptoms, what we're looking for to be the blow off top. ES needs to be up that 69, 7,000 or higher. NASDAQ needs to be around that 27,000 or higher. Dow needs to be up around 50,000 or higher. Nikkei, we'll go over that in a moment, needs to be up around that 54,000 or higher kind of scenario. And then the IWM needs to be up here, if you're looking at IWM, right around that 256, 265 or higher. And then that sets up the Elizabeth, I'm coming to join you, honey. One other parameter I put in here, well, several more, is the equal weighted RSP, which is equal weighted S&P 500. It's the ETF, equal weighted. So where does it need to be? It needs to be around this 194, 198 or higher. So when all these things come to pass, ES is at 69, well, say right around 69.90, 69.80 or higher, 7,000-ish. We get NASDAQ up at 27,000 or higher. You get the Dow at 50,000 or higher. You get the Nikkei at 54,000 and higher. All these together, IWM pushes toward that 26,000, 2,600, 2,700. IWM, that 256 to 265 zone. And RSP, the equal weighted, is up around this 194, 198, pushing 200 level. All those come to pass. That's when I think, Elizabeth, I'm coming to join you, honey. And you throw that in with the other barometers we've been using for a very long time, and that is this heat map. Heat map, schmeat map. But when the 200, how many companies of the S&P 500 are above their 200 moving average? And we'll just take a quick look at that. The bias is it is a oscillator, obviously, and it oscillates between 80 and higher to 20 and lower, and that's where we've been oscillating. So as I move this and I'll stretch this down just a touch, I want to get down here. We can compress this a little bit. I don't think we need to go too much more, but you can see, when are we going to get a big market correction? What happened in 2022? We're above 80, 90%. We went down to below 20, right? And where's the last place we touched? A few times up at the extremes. And then most recently during the tariff talk, Liberation Day, we came down and touched it. So where is this likely headed? It's an oscillator. This is what it does. So what is this going to look like when the markets are tapping out and we're ready for the big one. Elizabeth, I'm coming to join you. I want to see this back above 80, 90, 90 even preferred. We don't stay above 90 very long. Typically we get near 80 and we start to falter. So when 80 plus percent slash 90 plus percent of companies in the S&P are above their 200 moving average, that's setting up the market crash for the next big push down to these oversold territories, which will be below 20, etc. So that's what I'm looking for. So let's throw them all together. ES trading up around that 98, 99, 98, 99. Trading up around 69, 68, 69, pushing 7,000. We get NASDAQ pushing 27,000 or higher, Dow pushing 50,000 or higher, Nikkei pushing 54,000 and higher, IWM pushing the 2600, 2700 slash IWM, the 265, 256 to 265 area. RSP we just looked at pushing that 194 to 199. And this is up in the extremes. That is a major warning sign to start looking and putting your trades in a position to where you could trade the downside, or you're putting money away like Warren Buffett and saving it for the next time the market crashes to go discount shopping on some great opportunities. As the market crashes, you get some new pricing. You can load up for the next big run. All right. So what does this look like in the bigger degree? That's this chart. That's the S&P. Come back over here. You can do it for the others. Come back for the Dow, the Russell, especially the Dow. I want to see this number at 80 and above. So I'm just going to click that. We kind of touched it. So I think we're going to retouch, get that last little, like we do a few times, few taps, then we get the push. Well, we're getting a few taps. I think we're going to get one more. So these all line up together. ES goes up here, Dow goes up there, NASDAQ goes up there. Then we get Elizabeth, I'm coming to join you, honey. All right. So I want to see the Dow up at that higher level. How many companies of the Dow are at the 200 moving average? And NASDAQ, it's just like ES. Where is the last place it touched? And I'll compress that in. We didn't quite reach the 90 up there. We can condense this just a little bit. And I don't know why I don't have my lines on here, but I'll do that real fast just to keep your eyes focused. We want to go back to 80 and above. And we want to go to eventually 20 and below, the old 80-20 extreme. All this is a barometer. Whenever you see this on a 200 moving average down below 20, you're looking to buy. When it's above 80 or higher, you're looking to sell, buy, etc. So where's the last place we touched on the NASDAQ? Was down here. So where do I think this is going? Up above 80, maybe pushing even further. So could we get this toward that 90? We don't do it often, right? Look at NASDAQ. We don't do that one often. ES does it a little bit more often than the NASDAQ. But let me compress this a little bit more so you get more price action in there. And you can see that we don't hit 90 often with the NASDAQ. We hit a little bit more often with the ES and the S&P, less often with the NASDAQ, but the same rule. Everybody good? So last place we touched is here. Where are we going? Up here. So when I see these barometers, so easy way to look at that, you look at them individually or just do the heat map and come back to the heat map. So when this is at 80, 90 or higher, this down here for the Dow, 80, 90 or higher, the NASDAQ, 80, 90 or higher, and we see on the charts Our RSP up at 194, 198 or higher. ES up at this 69, 7,000 or higher. We see NASDAQ up at 27,000 and higher. We see the Dow, you see what I'm saying? We see the Dow upwards of 50,000 or higher. And then last but not least, I look at the Nikkei as a global liquidity. When it's up around this 53, 54 or higher, that's setting the tone for Elizabeth. I'm coming to join you. All right, so I'm not doom and gloom. I'm perma-cautious, if you will, because this big rip is going to have a bigger dip. And when we get the big one, it's same thing's going to happen with the Nikkei. We're going to get that big correction. But in the short term, look for a dip and a rip to get up here. But when they're all there, all those barometers, which we've just been discussing, chart action, you know where the prices are. Barometers, you know what that should look like. Go to the 200 moving average. How many companies in the Dow above the 200 pushing 80 or 90? How many companies in the Russell? I'm not so much worried about this one because it's been underperforming to get to 80, 90. This is not one I'm really looking at. I'm just looking for price action on that one. But definitely on the S&P 500, want to see this to be above 200. The NASDAQ above 200, the 200 moving average above 80, 90, Dow 80, 90, and S&P 500 80, 90, combined with, I'm just reiterating, price, Nikkei 54, Dow 50 or higher, up there 50 or higher, NASDAQ 27,000 or higher, and of course, last but not least, S&P 500 up at 69, 80, 7,000 or higher. Then we're going to do some shorts on this, some put spreads, inverse ETFs. There's a lot of ways to play this. Amen? VIX goes spiking when that goes dumping. We like using this inverse, ultra short. So there's many ways to play the Dow when it goes crashing, etc. Do it through VIX, do it through put spreads, do it through numerous ways. Amen? Any question? So let's circle the wagons on the markets. What are we looking for? Go back. For those of you that are futures traders, remember most people that trade futures, they die and go to heaven on a point or two. Well, we're talking 50, 60, 100 points that we anticipate in advance, and the markets tend to play out exactly that way. And just looking at the most recent movement, Randy, we discussed a few weeks back, we got the dip. We expect it to rip into this area, correct down to here, then go up to there. Look how that's playing out beautifully. Now, as I was saying earlier, I do think we're likely to get a little bit more of a correction. Now that we got this beautiful bounce, I'm looking for a little retracement, then another push higher. So be careful that this is the over and we're ready to go blasting off. Well, this still could be perhaps the correction, pay me now, pay me later scenario. That this move up, we need a correction. Well, is this giving us the last little push? I'll use my other arrows so I don't have those big ones. So is this part of a 1, 2, and this is probably ending? Is that the 5 there? Or do we need, this is the correction and we're finishing? Or do we need one more push, then the correction? But be in a position of authority on these, because I'm expecting after this bounce, we're just not going to go straight up vertically. I think we're going to get a correction, which is sort of underway, and then we're going to bounce. So that's the plan, right? So we did what we were looking for. We reached this, exceeded it by a little bit. We got the correction we were looking for. Now we're looking for the bounce to go up higher toward that 69.80, 7,000 range. Only thing I'm saying be cautious about now. After that run, we likely need a little correction before we continue. Even if we go up a little higher, then we get the correction. Still think this is the end result. We're going toward that 7,000 target up there, 69.80 area. That's the plan. And before we just go straight up there, I do think a correction is coming. This may be the beginning of that, where we get a little correction, then more. Either way, or we go popping into this resistance zone, then we get the correction. But I'm looking for no lower than this low up to this area, no lower than, say, that 6,700 zone is where I'm looking for. So when the correction comes, say we pop into here, then we get it, or we start getting it now, I'm looking for no lower than about 67, so maybe about 100 points. So it could go higher first, then get it. But the plan is stair step up to that target. Amen? So in closing, still think Santa Claus rally is available, pushing toward the end of the year, maybe first quarter. Higher. NASDAQ, ditto. We did exactly that. We went up, we retraced a little overshoot to the downside, like the ES did a little overshoot to the upside. We got this to do a little overshoot to the downside, but I still think this low is likely going to hold at this juncture, and we're going to get a correction to continue to stair step toward that 27,000. So any dips should be bought and look for this to go higher as we move toward the end of the year / first quarter next year. Only question is, do we dip down? How far would we dip if we're going to? Well, this is critical. This correction with this bounce, we need this 618, 25,000 area to hold. Long as this 25,000 holds, expect we're going to 27,000. If we break that and we don't hold 25,000, then look for us to come down toward 24,000. And we'll go to the daily to show that bigger picture toward the 24,000 zone, which would be extensions. Then what? So even if worst case scenario, we get a bigger correction, we don't hold that 25 area, and we break to a new low off of that swing point, then I'm still buying the dip to get to 27. Right? So I got a plan of action. No matter what the market throws at us, my plan of action is to buy the dips till we get up to 27. Then when we hit 27 or higher, we're going to look for opportunities for the big Elizabeth, I'm coming to join you, honey. And again, in the short term, that's why I was warning you today. We're probably going to get a correction first, then we go continuation higher. So all this is stair stepping to go where? Up toward that 27,000 target. Okay? All righty. And if you didn't hear it, just go back to the archives and you'll listen to what exactly we're looking for. ES to get above that 69, 7,000. NASDAQ to get to 27,000 or higher. Dow to 50,000 or higher. Russell toward that, if you're looking at IWM, toward this target up here, which is 256 to 265 zone. RSP, which is the equal weighted, to get into this 190, 198 zone. Then you go over to this and look at the heat map where the 200 moving average, how many companies in the S&P 500 above the 200 moving average starts pushing 80, 90 or higher, at least 80, then this is kind of telling you, look out. Elizabeth, I'm coming to join you, honey. Here we come when all that manifests. Amen? All righty. Let's continue. What about Black Gold Texas Tea, the Beverly Hillbillies? Zoom in. I'll start with the daily first. Zoom in. We've been looking for this. And we expect black gold is going to go below and push 52 and lower before we're done. So I don't think this is the beginning of a blast off. I think this is the beginning of a push lower eventually. So what have we been saying for the last several months? Any rally should be sold. Any rally should be sold. Any rally should be sold. And we haven't making a new swing point low yet. That's why I still say any rally should be sold. And we're expecting this to come down to 52/48. Why is that? From this recent low up to that high, we took out the 618, we took out the 786. So what does that tell us? We have a 75% chance we go into 52. 70 plus we go into 49. So this is why I've been calling for $50 to come into play. And in my humble opinion, we're definitely going to 50. The question is this initial move down? Is this the A, the B, and we get a little C action? Then we go down. So yes, I nibbled on SCO. I nibbled. We got a pop. Now we're correcting. So what does the SCO do? It's the ultra short crude oil. So as crude goes plummeting down to 50 and lower, this thing's going to go spiking higher. Last time we saw the crude go plummeting, it went down to 55 bucks. And what did this thing do? It popped up to 24. So inverse relationship. Crude goes plummeting. This goes up. Crude goes up. This thing goes down. So, Randy, as you well know, I nibbled in this, made a little bit of profit there. Now I'm looking for this to dip further to add to my position for this thing to go popping. When crude goes a dropping, SCO is going to go a popping. So I'm looking for, and I have a resting order down here, good till cancel at 1750. We're getting awfully close to add some more to my position. Got some more down at 17, 16. So I'm just adding to this position for this little correction while oil pops a little bit. Then when oil drops, this thing's going to go ripping higher. I can't tell you what to do. No buy, sell, to hold recommendation. That's not my job. I can tell you what I'm doing. Sure, that's exactly what I'm doing. Adding to this position for this thing to go spiking. When oil prices go plummeting, this is going to go ripping. That is the plan. And I'm looking for this to dip so that we can fill and add some more of that SCO and hold it as oil goes dipping down to 52, 50 or lower. This should go popping several dollars higher. Any questions? So in closing on Black Gold, Texas Tea, the Beverly Hillbillies, I would love to see this spike up there. Love it. Why? It's going to make SCO go down. And the lower SCO goes, the better the price I can buy and add to the position so that when this baby reverses and goes plummeting down to 52 and lower, making a new swing point low, that SCO is going to go ripping higher, right? Then what? Then I'm going to bail when this gets down here. My SCO goes popping. This goes dropping. Then I'm going to reverse and look for CL to then go ripping higher. Landman is a show I watch. It's about drilling oil. And they talk about this in great detail, which is true. Oil has to be in the 60s for drillers to make money. Drill, baby, drill. They can't live when we're down here at 50 and lower. They have to be in the 60s for them able to drill, baby, drill. Then, if prices go too high, you start pushing 90 or higher, then the cost of everything, goods and services, go skyrocket. And the drill baby drillers out there can't afford to survive in that environment either. So that's why oil should always be somewhere between 90 and above 60 and kind of just stay range bound in there. And whenever we get these ridiculous spikes outside of that, they typically don't stay there forever and they come down. And we've been there expensive for a while. So that's why we're going to get the low side for a minute and then we're going to get back in the 60s. But we pegged this ever since 2023. When I saw that swing point low, then I saw this chopping action. We continually made lower highs. We continually went lower. And I told you then, oil, any rally should be sold way back then because we needed a new swing point low below that 64 area. We got it down to 55. Now, this same type of price action, Randy, we discussed this in great detail. Since this low, we got this chopping and we went to lower high, big pullback, lower high, pullback, lower high, lower low. And all of this ultimately resulted in what? A new swing point low. We got that. Well, check out the latest price action since that swing point low. Since this low, we got the same kind of grind, and we popped, we dropped, lower high, we dropped, lower high, we dropped. So this same price action, which was reiterated back in 2023 that we needed a new low, we're getting it now telling us we need a new low. So I was right then. Eventually took a while. It finally gave us that low. Well, highest of highest probability, we're going to see it again with the same scenario. That since this, we got the same kind of thing. Lower high, drop, lower high, drop, lower low. Still didn't make a lower low yet. And then you add to it more things like this low to that high. We took out the 618786. That's screaming 75%. We're going to 52. 70 plus, we're going to 49, aka 50 and lower. So for the longest, I've been telling you, any rally should be sold. 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 And I'm still telling you, any rally should be sold because we need to come down here. All of this overlapping, chopping, grinding, grunting, laboring action needs a new swing point low to reset. And by resetting, we come down at 50 and lower. What happens? Drill, baby, drill. Can't survive at those lows. This thing's going to go popping just like it did last time. What happens when we're below then? Rockets went off in the Middle East, forcing this thing to go popping real quick. Well, we get down to 50 and lower. I expect another big pop to get it back into the 60s. So you're talking a substantial move just to get back in the 60s. In the short term, this rally is going to cause SCO to go lower. You can see it's down today, even though oil's up, inverse. So I expect this rally is going to fizzle. We're going to get a big sell-off. And then once we get down to 50 and lower, that's going to cause SCO to go spiking several dollars. And then once we're in the 50 and lower scenario, I'll close my SCO shares for whatever gains I have, which should be several hundreds and hundreds. And depending on how many hundreds of shares you own, but it should be hundreds and hundreds of dollars. And then we do what, Emil? Look for this to reverse and go massively surging higher. Amen? Then we can short. After this gold comes down, we can go long crude and look for this baby to go popping in excess of $10 plus. because depending on how low we get, 50 and lower, we're going to pop back in the 60s. So we're minimum looking for a good $10+, 10, 15 kind of pop once we get down there. So in closing, look for this rally. I'd like to see it go test the Magic Fibo up here. I'd like to see it go up into that zone. And by doing that, that'll push SCO lower to buy some shares. And then when this goes dropping, SCO goes popping, right? Everybody with me? So look for this to hopefully go a little bit more. I'm already own some of this. I'm buying more at 1750, not too far away. I'm buying more at 17, more at 1650, more at 16. Depends on how high does this thing pop, right? Some people could look at this on a smaller scale. Is this the beginning of an inverse head and shoulders? We got a shoulder, a head, a shoulder, and we go popping to go up here. Then we come down. No matter how much we pop, we're still going to drop on gold, black gold Texas tea. That's the plan. And by doing this pop, this is going to cause SCO to drop and reach my buy some, buy some, buy some. And eventually I should have hundreds of these for when this baby goes a dropping, those hundreds are going to go a popping. And that's the plan. Then, Harold, when we're down at 50 and lower, sell all of these for your profit and then look for a crude bounce of significant nature. $10, $15 type of bounce, because we get below 50 and lower, we need to be back in the 60s. So there's your 10 to 15 bounce that will come, in my humble opinion, very quickly. I don't see it staying at 50, 40, 30, and just staying way down here forever, because drill baby drill can't operate at those prices. They need to be in the 60s. And just like the last time we got below it, it popped very quickly. I would expect some sort of same type of reaction. Amen? All righty. What about gold? Still think be careful with gold. I expected we'd probably get a rally toward this resistance zone and then another push lower. I don't think this is the end of gold correction. This looks impulsive. This looks three wave. So what do we need? Another push lower. So be extremely careful on that, because I don't think we're ready to go breaking out yet on gold. Still think we got more downside to come. We have a weekly hook and a cross. We have the daily that ran toward oversold, which didn't finish. Right? Look at that. Hook, cross, steep slope, angle separation. We didn't quite finish the cycle. So what I expect us to do, go from a slingshot up to a slingshot down. This rally is going to fizzle. We're going to go lower. This is going to turn back over. Why? Because a weekly hook and a cross, weekly PAI hook, trend momentum cross, steep slope, angle separation equals the daily cycling down. The daily has not cycled. What is the cycle? The PAI. The only AI you need to know is price AI, and that AI is this guy right here. Red and blue made it, but money flow did not. So in order to get that complete cycle, this green line needs to get oversold as well. So this is why this rally is going to fizzle. We're going to go lower, and this bear is going to go for a little slingshot up, slingshot down, push lower, and let the daily finish the cycle. Well, look at the monthly. It's getting close, my friends. Do we physically get a monthly PAI hook and a trend momentum cross? Do we get the slope and the angle and separation? If that happens, we're going to get even a deeper retracement before then we go ripping higher. toward the 6,000 targets next. Any questions? So I'm keen eye on this. We're in the middle of the month, so we have a few more weeks. But if this thing continues to go lower and we see this extend lower and cross, and we get steeps like this over here, we get the hook, we get the cross, we get slope, we get angle separation, then that means the weekly cycles down. And look at the weekly. It would take months longer for that weekly to cycle down. We're not there yet. But the reason I'm so confident that this bounce is going to fizzle and we're going to go lower is because we already have the weekly PAI hook, trend momentum cross, steep slope, angle separation. Got it? So look at it with this. There's the PAI hook, red, blue, and green hooked. We got trend momentum 1, green below the red. Even trend momentum 2 got aqua below the yellow. And we got what? Hook, cross, slope, angle separation. That equals weekly hook and across equals a daily cycling down. And this daily's not finished. Why? Red and blue made it, trend momentum made it. What do you mean it's not done? Money flow, right there, the green one. So when a PAI cycles, it is red, blue, and green. So again, this is going to fizzle and go lower. That's going to turn up and go back down, not like circle all the way up there, but this little hook, this little guy right here, is going to turn back down. This is going to turn back down. That's going to turn down. This is going to turn down. And as price goes dropping back to the lows and make new lows, this is going to cycle down. That's going to cycle down. Amen? So what are we looking for? We're looking for a lower high, lower low. So what are some targets? Magic Fibo. That's like a heat-seeking missile. This drop, over $400 drop, this looks three-wave correction, and we need another push lower. So what is that? Those of you that like Elliott wave or chart patterns, this is the A right there. This correction is the B, and we come down in C, seeking out that magic Fibo. Then when I see what? My daily oversold. Well, what if it takes longer in my daily and weekly oversold? Even better. Then I buy that, look for the next run. So I would not be real bullish gold in the short term because this thing is probably going to fizzle. And even the last week or so, after this pullback, I said, look for this to make a run toward this resistance zone to then get rejected. We got the weekly hook and across, the daily cycling, and the daily hadn't finished. So we're looking for that to go lower, price to go lower, seeking out the magic Fibo. And the magic Fibo and all this is part of the software, which you can see in the different platforms. And we even have it in NinjaTrader. All right, NinjaTrader, we have it in there. Software is in there. Got all these templates for you. And check out Lily. Harold, we talked about Lily the last few weeks, that it was headed toward 900 plus, the next one 1,000 plus. What is that? Well, those magic Fibos, you go in here into drawing tools, go under retracements. So we come up here from the recent swing point high up to this swing point low. We'll reach the first target, 984, right there. What's the next target? 1,024, 1,020. So I expect a little bit more upside coming. So any dips on Lily in the short term should be bought as we start moving toward the next target. But I would definitely be in a position of authority on that bounce. When we discussed it, it was when we crossed this pricing down here. When we saw that happen, we got a daily candle close. It's at 75%. We were going to that target. Lo and behold, we're there. And we have a 70+%. We're going to push on 1,000-ish. target next. So in the short term, any dips bought, look for Lily to go up toward 1,000. Amen. But all that's a part of the software, including the Magic Fibo, these extension retracements for your convenience. Anybody that's familiar with NinjaTrader, to do their version of the retracements, it was very time consuming. You had to manually add a bunch of things. Well, with this software installed, you get that and you get all this already prefabbed for you. And all you got to do, again, go to drawing tools. We have the extensions and the retrace, MPA Fibo retracement, Fibo extension. How cool is that? And why you need to be in a position of authority? Daily's getting a little overbought, so wouldn't be surprised to see a little bit of pullback. Weekly still going. That was the plan for this thing to go. We talked about it a few weeks back. When the high to the low, we broke the 618. We used the rule. We have a 75% chance we go to the 1448, and 70 plus we go to 1272. That's it. What a beautiful move. Amen. All righty, so let's finish up. Any rally should be sold on gold because we expect the next push. So be careful up here. I kind of expected that bounce for gold to give it, but notice gold is expected to then turn back over and go lower in the coming days because of, you guessed it, that weekly hook and across. Well, guess what, guys? You could have set this ready to trade mode to buy the trigger short, and you'd have gotten that 400 plus bounce. And why did this bounce occur? 4-hour cycle. Right? That's all it is. We started grinding as the daily's reversing, engaging, but we expect it to do what now? Fizzle. So what's gold going to do, in my humble opinion, Randy? A, B, C. Turn down. This little guy is going to turn down. This is going to go lower. That's going to go lower. And we're going to start getting sucked and pulled into the cloud, looking for the magic Fibo that's pushing. That's the plan. Got it? All righty. What about silver? Silver is basically in the same boat. We topped. We're getting a retracement to where? Same thing we discussed a few weeks back when we got this push lower, that we were going to get a correction. Notice this looks impulsive, this looks corrective, and we need what? Another push lower. Where did we retrace to? 618 rejection zone. Huh. So as long as silver remains below this area, we expect this to make a new push back down, making a new swing point low. And I'm just going to set this up with my pink for resistance. So be careful short term. I expect this to go lower. Why is that? Exactly the same reason for the software. For silver, we have 4-hour getting overbought daily in the midst of this engage, disengage. And what is the deal with this? This is not finished, so we're going to go from that slingshot up to slingshot down. That's going to turn over, go lower. That's going to go lower. Why? Because the daily never finished the cycle, and we had a what? Weekly hook and across. Amen? So what do I expect this to do? This engage is going to disengage, disengage, disengage. Weekly's going to push, weekly's going to push. That daily's going to do what? Finish the cycle down. We're going to get this little correction finished, and then we'll look to buy the dip. As silver goes to, in my humble opinion, there are no guarantees, right? But I think it's definitely going to $60/$70, but we need this correction first. So I'm going to draw the Picasso. I think this is going to turn back down. This is going to turn back down. That's going to turn back down. So we're going to have the weekly depressurize further. This is going to depressurize and push a little further. And while that is happening, this daily is going to do what? Finish the cycle down. And this basically slingshotting up is going to slingshot back down. This is going to turn back down. And why? Because the weekly hook and across equals a daily cycle. And my daily did not cycle. And you say, well, this looks like that did, but the green didn't. And this did. Yeah. But it's all the above. It's not just red, red, blue, red, and or green. One, if one or the other, it's all. And at least this. So part of the equation, this made it. Two of the three made it, but the most important one didn't make it. That's why it's going to go lower. Amen? So look for this retracement 618 failure to push lower. And notice when you use the Fibonacci extension retracements, where are we looking for? You can use the 3-point tool on this one, right, Harold? We got a high right up there. We have this low, and we have a lower high area. So what are we looking for? Look at that. 40, 41, Magic Fibo, right in the neighborhood, right there. A, B, C. All I can say is when we get the dip, 40 bucks or lower, we're looking to buy, because where we're going, no matter how low we go, we're going where? Stratosphere up here, 60, 70. Where does that come from? The picture we've already seen from this recent high to the recent low. And I say recent, previous high to the previous low. We broke the 618, we broke the 786. Says we're going to what? 60, 70. 60, 70. Amen? So this dip should be bought, and look for this to go ripping higher toward that 60, 70. Well, even bigger than that, really sets the tone, is go back to gold in the same time frame, got the big pullback, and look where we're reaching. We're reaching upwards of 3.61 extension, even beyond that, starting to push toward the 4.23 extension. That's gold. Well, look at silver. Silver is still well underperforming. We just recently went and made a new high. So imagine, Emil, we start to get this baby to catch up, not to these targets, which is why I say this is a guarantee, but it starts pushing to catch up with gold up toward the 368, pushing the 423 up there, 4.236. That would put us around 150 to 170. And we're at 50 bucks. Not too bad. Whether you're trading SLV or futures, same thing. 60, 70 still the target. But if we were to catch up, start pushing the 2618, 3618, 145, 168. Long way, isn't it? So that's why I say be careful. Look for the dip, buy it, and then hold and look for 60, 70. Then we start targeting 95 and 100, followed by a 145, 168. And no, I don't think we're going to get there by 2026 way up here. I do think we had a very good chance would be up here in the 50, 60 range, 60, 70 range by 2026. And I don't mean a couple of months in 1st of January, but sometime during that year, we should get up to this target. That's kind of the plan. Timing is the hardest, but definitely expect more upside. All right. Last but not least, Bitcoin. Bitcoin still is struggling. High level overview, you well know Bitcoin does a halving every 4 years. After the halving, we go on a 12 to 18 month run. Halving, 12 to 18 month run, get the lows, and it starts rallying into the halving, 12 to 18 month run. Well, we're coming toward the end of that 12 to 18 month run. The bias is after crypto bull run is over. We go through a period of crypto winter and we get massive pullback. My nibble zone for Bitcoin is on the next pullback. When it's done, it's going to be down here in the 50,000, down here, nibble zone, 50,000 and lower. All I can say is, like I told you back here, when Bitcoin was below 20,000, I told you it was absolute deal of a century for you to have the opportunity to buy Bitcoin below 20,000. It was almost a crime to be able to buy it that low, steal of a deal, and that we were going up. We still haven't reached our major target yet. We got close, but no cigar. So am I trying to tell you this run is over? Not yet. But we need to see price action do a few things. So we start drilling down, looking at current price. And as I zoom in, I think we got one more push to one more swing point low. We may need that. In the interim, we got this move. And this latest move here, Randy, is this the 1, 2, 3, 4, 5, and we get one more little push toward our big make or break support zone to then go ripping? Or this is not looking real bullish right here. We're starting to get some overlap. Well, if you say, well, no, this was the end of that move down here, and this is the 1, 2, and that's the 3, well, 4 is already overlapping 1. So that's why I'm not convinced that that low was it and we're ready to go blasting off just yet. I think we're probably going to get one more push, get a new swing point low. Here's the ideal zone for it to reach right around that 96,000 to go bouncing. Why that? The bigger picture. The bigger picture from this recent low up to the current high, that's my 96, 95 area, is my 618 retracement zone. And this would be ideal to go ripping from there. If we get that, we get a push to a new low, we bounce off of here, we want to see bullish price, bullish price action. What is bullish price action? Not this. Why? Because if this is, like I was saying, if that was the 1, that was the 2, that's the 3, and this is the beginning of 4, we're overlapping 1. Bullish price action has to be where you like one wave, 2 correction, 3 up, 4 correction, 5 up, where wave 4 coming down does not enter the area of wave 1 top. That's bullish price action. So be careful. I mean, it's possible this could not break another new low, and eventually we start breaking, but in order to get bullish, we got to get above the Magic Fibo. We get above the Magic Fibo, then we start targeting 118, 121. By getting there on the bigger picture, we can then start targeting 130, 133. But I would like to see that bigger move, which represents a perfect bounce of a 618 nature, right, Randy? This would be perfect. Nice move up, correction, next move up. And that would still get us to our 150, 170 target we originally talked about a few years back when we were sitting below 20,000 over here. Down at that crypto winter low over here, we're below 20,000. I gave you this 150, 170 target way back then. Back in 2022, said, man, it's steal of a deal to buy this. We're going to 150, 170. That's not off the table. But there has been a warning shot fired, and that was that recent high, and then we got the correction, and we still think there's probably one more push because this is overlapping still. So this is critical, this zone. We don't hold that zone around that 95 down to about 86, which is what? This is my 618, 786 zone right there. We don't hold that, we break below it, then crypto winter is underway, and this will be the high. But if it does set up where we have that to this, to then get an impulsive 5-wave up, 3-wave correction, then it really sets the tone, not only pushing to 150, but probably even giving us more 170 to 180, pushing the upper end of that target. Amen. So all I can say is this is the ideal zone, especially this 618 right there, right around that 95, 96, 95,000 range. Hit that and bounce off of it. That would give us the big catapult to get that blow off top. Amen. So in closing, be careful short term. This recent price action is not very bullish for the reasons we just discussed. If this was, again, the initial, this is the bottom reversal, and here's wave one up, wave deep, wave two, wave three, wave four. We're already into the area of wave one. That is no bueno. So what I think is unfolding based on that is that this is the latest move in a bigger degree ABC. And let me bring this into perspective, that this move down is the A wave, that move up is the B wave, and we're finishing the C wave down here, this one right there, C wave, and this is part of the most recent A, B, C, and this is the 1, 2, 3, 4, 5 to then reverse. Amen? So that's what I'm thinking. So on the smaller scale, there's my A. 3-wave correction B, and the C wave is going to be a 5-waver. 1, 2, 3, 4, 5. Amen? So what does that mean? All we got to do is get a new swing point low. We don't have to come all the way and touch 96 area, but if we do, and we go ripping higher out of that in a what? 1, 2, 3, 4, 5, where it's impulsive without this overlapping like we're showing now, that still says more and more push. Then we get the proper bounce followed by a 3-wave correction, then another run. Then it really sets the tone that we're going not only to the 150, 170 original target, but if we bounce off of this zone and do what I'm looking for, it'll push us more to 170, 180 or higher. Amen? All righty. So any questions? So expect Bitcoin to probably get one more push. And then we go ripping. All right. So don't be shocked if we drip several thousand more and dip below 100,000 again. But bringing that into perspective, last week and the week before, I talked about us making a new swing point low. On the same reasons of price action, that this was probably going to give us one more swing point low. And because the way this bounce is forming at the moment, overlapping, more than likely we need one more push lower to finish that bigger ABC, and then we go ripping. So I'm looking to buy the dip and look for the rip. ETHU still kind of Ethereum still chopping in the zone. We could push a little lower. If Bitcoin does it, Ethereum might do it as well. And we're still looking for the last hoopla where we go ripping higher. I'm still holding on because of the same reasons. That same scenario, if you take from the crypto winter low over here, on that dip anyway, to this run up, to this recent high, we need to hold this 618 zone. So I'd love to see this thing do the same. 1, 2, 3, 4, 5, get another swing point low, start pushing near that, say, 2800-ish range, which is the 618 off of that bigger move. Then we go ripping. And why ripping? Because it's on the chart already. And I'll do the weekly for this. From the prior all-time high to the crypto winter low, we broke the 618, we broke the 786. So that gives us a 75% chance we're going to 55. 70 plus, we're going to 6,000. If we break that and start pushing 7,000, then our ETHU is going to go moonshot. Remember with our conversation, we talked about this when we'd go up to this 160 to 200 range minimum. It did that. Now we got another retracement into a 618, 786 retracement zone. And we're looking for this to go up higher. So if Ethereum can run and reach 6,000, starting to push 7,000, then we're going to start targeting what? We get to 55 to 6,000, we're going to be targeting 200 to 250. And if we go blasting past 6,000, pushing towards 7,000 and higher, then we'll start targeting that 250, maybe 280, 300. But this was fun trading this. Back before they did the split, see, this thing was down around $4, shot up to 12, took profits on that. We loaded the boat on this, took profits on that. We're on the house's money, and I don't think this is the end, and Bubba believe that's all, folks. We're going to zero. We're going to get another pop. The question is, do we go popping up to back to 160, 200? If Ethereum could go breaking its previous high and run toward 5,500, 6,000, establishing new all-time highs, this will start pushing back toward that 160 to 2 again. We break that, start pushing 55 to 6,000. We'll start targeting 200 to 250. And if we rip past 6,000 towards 7,000 or higher, we'll start targeting 250, 280, maybe 300. Then what? When it's time for Elizabeth, I'm coming to join you, honey, crypto winter to come, all of these are going to be sold for massive profits yet again. And then we look for our bigger picture, which is Bitcoin going into 2026, maybe early 27. We'll get into this nibble zone, crypto winter low. We nibble again like we did here in 2022 when I said the same thing. Amen. And that's a 4-year cycle. Every 4 years, the blue line is the halving. You go on 12 to 18 month run, big pullback, run into the next halving, 12 to 18 month run. That's been the rinse and repeat every time. And it doesn't look like much on this, but even back then looks flatline. But when you stretch this out and go back, it made quite the run, 12 to 18 months post halving. Then you get a crypto winter low, 12 to 18 month run, rinse and repeat. So even going back to the original one, you stretch this way out, and it's pretty substantial. Look at that. See it? So we went into the first halving, 12 to 18 month run, big crypto winter. Next halving, you start running into the halving. Then you get that 12 to 18 month run. See it? Substantial. Big crypto winter low after the halving. Next one, you start rallying into the halving, 12 to 18 month run. That was the previous one up to all-time highs. And then the most recent one was here, 12 to 18 month run. And I don't think it's finished yet, but we got to hang on to those pricing we looked at and love to see it make a swing point low, then go ripping impulsively. And we'll take it up in the next class and the next weeks and into next, well, as we go through the end of the year. And if this thing pushes into first quarter, we'll discuss that as well. Amen. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. And Randy, where we're looking at the pound yen, and we're in this ready to trade mode on the pound yen. I got my short, got my profits, got pipped out, got my short, made hundreds of pips, got pipped out again, and I'm back on the daily. This is showing right here, daily, looking for this to go short again. So be careful because of all this chopping overlapping. The bigger picture is we need a big push lower, whether it's when Elizabeth, I'm coming to join you, honey, starting next year, and we get it. We do know what the pound yen does. Just as I circle the wagon, the pound yen participates in a big tank during the financial crises. And as I pull that up, the bigger picture, and zoom this out, we had these big runs. Dot-com bubble burst, 2007 financial crisis, this most recent one here, and this is going to be the next big one. Elizabeth, I'm coming to join you. That's why I want to establish a short on this and get to position of authority, get pipped out, do it again, because the bias is based on that latest price action, overlapping, chopping. We need at least a new swing point low down below that 180 and change, which is a couple of thousand pips from where we are. Even if this thing goes higher, the higher it goes, I'm still looking to establish a short. Because when Elizabeth, I'm coming to join you, honey, comes, market crisis. Typically, this thing dropped 13,000 points in 2007 financial crisis, and it dropped 9,000 points in the dot-com bubble burst. So what's going to happen in the Elizabeth, I'm coming to join you? Somewhere between the two, maybe, or maybe even bigger. But the technical picture without all that at the moment, and this is where we're saying, what if we get this now? That was that last one. What would it look like? And it's already there. So I'm moving all kind of things here. Didn't mean to do that, but I'm just going to remove these. But what if we get a big one? Maybe it's 7,000. And wherever the high is, maybe we got to adjust this a little bit, move that up some more, move that out of the way, and move this guy. I can grab him. I got so many things on my chart. That's why I use this. But I'm looking for the down arrow, and I'm looking for this box to move. It won't let me move till I finally get everything out of the way. So even if we go a little bit higher, we get somewhere around that same 37% drop. What if we get a 50% drop? 10,000 pips? Match that one? Maybe. Come back to 90 something below 100? Wow. Could this be the bigger A and this is corrective B and we get the much bigger C and we actually come below this low and make a new low? Maybe. But without all this wishing, dreaming, and fantasizing, this up here is about 2,000 pips just to get to this low, much less the Elizabeth, I'm coming to join you, and what that could potentially do for us. Amen? All righty. So with that, take care. God bless you. We love and appreciate you. And as we like to close, that's it. That's all. We'll see you tomorrow.